we all want more sales. We want to grow our businesses and we want to create as many sales as we can possibly do. But you've also heard me say that we are in a profit game, not in a sales game. And while sales are fantastic, sales are awesome, if they're not profitable, it doesn't matter why we're trying to push for them. Hey, badass business owners, my name is Tammy, and I'm here to help you grow your business, but more importantly, grow those profits. And what I thought we would do today is we would take a business and we would take a look at two categories of that business, and we would answer the question for the business owner: which of the two categories should they be driving in their business? Which one should they be getting behind? Should they be running specials on? What should they be pushing? All of that good stuff. What we're going to do is we're going to pick on an ice cream shop. Back in the day, I used to have an ice cream shop, and so I'm pretty familiar with the way the business works and what the numbers are. Now, granted, mine was several years ago, over 10 years ago, but I promise you they're going to still be pretty darn close for a generic ice cream place, and that's what we're going to do. If you think about an ice cream shop, they have what? They have cups and cones. You know, when you get a scoop, give me a scoop of ice cream and I want to leave. They have sundaes, they have shakes, sometimes they have cakes, they have all kinds of good stuff. So today what we're going to do is we're going to talk about cups and cones, which is about half the business that a typical ice cream store does. Maybe they do more depending upon the business, but we're also going to take a look at the shakes because everybody loves a good shake. And I've also noticed that when people want to run specials, they think people want shakes. So let's take a look at this. Let's pretend for a moment that we're running this business and we want to know what category should I be really pushing in my store? Should I be chasing those sales? Because a shake costs a lot more than a scoop of ice cream. So let's look at this, shall we? So we look at a scoop of ice cream, and a scoop of ice cream, let's just say for our fictional ice cream shop, that scoop of ice cream comes out to $4.25. By the way, I don't memorize numbers. I've got a piece of paper here where I wrote a lot of this down in advance, just so that I didn't mess it up. So a scoop of ice cream, we're going to say is $4.25, and we're going to say the shake, medium shake, is $7.50. That's what this business sells them for. So if I'm this business and I'm like, hey, I want to push these, if I sell 100 scoops of ice cream, that means I'm going to make $425. And if I sell 100 shakes at the $7.50, I'm going to make $750. Well, right off the bat, you're thinking, wow, I get almost double the sales if I push those shakes. I really should be pushing those shakes over these cones because I want to make more sales. Well, let's play this out. Which one do you think is actually the better move for the business owner? Spoiler, it's not going to be what you think. Well, maybe it will because you know what I'm going to do, don't you? So let's walk through this. So we all have our favorite calculation because I know it's your favorite calculation. Say it with me. Sales minus cost of goods minus expenses equals profits. So let's break down this particular business. Okay. We already know the sales price of each of them, right? So now we just got to figure out the cost of goods and we've got to figure out those expenses. Now, when we're doing the cost of goods, as you know, is all the materials, ingredients, products that go in to making it, plus the labor that's necessary to be able to make or provide that service. Now, in an ice cream shop, we have labor and you can't make the ice cream without a person. But at the same time, it's a little bit different because we're not spending 15 minutes, a half hour, an hour, 2 hours, whatever the case may be, onto making this product or providing this service. So the overall number does go in the cost of goods. But for our exercise of looking at an individual item, we're going to take our payroll and we're just going to lump it in with our expenses because that payroll is spread out across a bunch of different items. So just bear with me. I'll explain more on expenses here in a minute. So we're just going to look at the materials and the ingredients needed to make this ice cream scoop as well as this shake. So for our ice cream, we have a scoop of ice cream, right? So the owner's going to take the tub of ice cream, figure out how many scoops they can get out of the tub, divide it by that number, and they're going to come up with how much it is per scoop. So in our particular case, we're going to say it's 60 cents for a scoop of ice cream from a cost standpoint. Well, they also have a cone that someone's going to put it in, right? So let's just assume the cone is 35 cents. But wait a minute, Tammy, what about the people that want it in a cup? They have a cup, they have a spoon, they might occasionally have a lid. You're right. Let's just say that comes out to 40 cents or 45 cents. We're going to land somewhere in the middle and we're going to say 40 cents because half of them are probably going to go out one way and the other half out the other way. So we've got 60 cents for our scoop of ice cream and we've got 40 cents for the vessel that the ice cream is sitting in. So our cost of goods on the scoop of ice cream is going to be $1. Now, let's move on over to our shake. When our shake's cost of goods, it's going to be a little bit different because a shake is made up of a bunch of ice cream, right? It's more than one scoop, a bunch of ice cream. It's going to have some syrup, some milk, might be some fruit in there. It depends upon how somebody's making their shakes. And they are going to have the cup, the lid, and the straw that goes along with that shake. So in our case, we figure out the ice cream, and our ice cream comes out to $1.50. There's a lot more ice cream in there, so it comes out to $1.50. The cup, the lid, and the straw, let's just say putting all that together, it comes out to another $1. And for the milk and the syrup and whatnot, let's just say it's 30 cents. By the way, it probably could have possibly be more. Milk sometimes can get expensive, sometimes it's not, but just syrups and all that. So we're just going to say 30 cents. Nice even number there. And that means our total cost of goods comes out to $2.80. Now, one thing I want you to keep in mind is that when I'm doing my shakes take 3 to 5 times longer to do than to make the ice cream. So from a labor standpoint, the ice cream scoop is boom, 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 you're done. Whereas a shake, it's going to take you, about 5 minutes to make that. So labor would actually drive that number up. But for our case, remember, we're going to be putting it under our expenses. So now we're looking at it. We've figured out our costs for each of those items. Now, what about the expenses? Well, the expenses are going to be all the operational expenses. And the reason that we want to put this into our calculation is because some of that money has to be set aside to pay our bills. And typically what I always encourage people to do is look at last year or look at the last 12 months. What's your trailing number? Could even be your last 6 months, but you need to pick a number. I wouldn't go by month because some months are higher than others because some things are paid monthly, some things are paid every 6 months, some are quarterly, some are annually. Just pick a number that's going to be pretty solid. And really all you do is you take your total operational expenses, divide it by your sales, and that's going to give you a percentage. In our particular case, because we're also going to include our labor, when we put our labor and our operational expenses together, it runs about 60% of our from our sales. 60% of our sales tends to be set aside for those two items. So if we know that, we can now go back to our items and figure out how much we have to set aside for each of those. So for our scoop of ice cream, we have $4.25, but we have to set aside 60% of that, right? Which comes to $2.76. And for our sundae, it normally is $7.50 for our sales. So we need to set aside 60% of that, which is $4.50. So now we can take all the numbers because we figured them out, and let's plug them into our calculation to figure out which one of those items actually makes more money. So let's start with the scoop of ice cream. Remember, sales minus cost of goods minus expenses equals profits. So for our cone, our sales are $4.25 if we sell one, minus the $1 for the cost of goods, minus the $2.76 for the expenses that we have to set aside, means we have a potential profit of 49 cents for every scoop of ice cream that we sell. Not bad. Now, for the shake, let's figure that one out. $7.50 minus the $2.80 that it was going to be for the cost of goods, minus the $4.50 that we have to set aside for expenses, means we make 20 cents. So we're only making 20 cents on the shake, yet we're making 49 cents on the scoops of ice cream. Now remember, when we calculated out the sales, we had $425 in sales in ice cream scoops if we did 100 of them, and we made $750 when it comes to shakes. So yeah, the sales were like almost 2 to 1, but the profit is actually flipped when we look at that. So when you look at it from that angle, let's look at 100, right? So if we look at 100 of them, that cost of goods difference is going to be $49 in profit versus $20 in profit if we sold 100 of them. So it's like, wow, do I want to make $49 or do I want to make $20? I think you want to make the $49. So right now you're thinking, wow, I probably should go with the scoops of ice cream. Now, let's say you want to run a special, right? You want to run a special because you want to get more people to come on in or come in more often. And you decide to do a BOGO event, buy one, get one kind of a thing. But instead of giving them a free one, you say, you know what? I'm going to buy one and I'm going to give you the other one half off. You see that one quite a bit. So if we buy one, get one half off, does that help us out? Does that all of a sudden turn that a little bit and do the shakes come out ahead? Because once again, we want to drive more sales, right? We want to get more people in the building, but at the same time, we want to be profitable. So let's look at some of those numbers, okay? Now this one I'm going to have to look a little bit more often. So ultimately, think about this. From a sales standpoint, you got 100 of them at the full price and you had 100 of them at the half price. So when we're looking at the cones, that actually works out. So you had 100 at the $4.25 and you had 100 at $2.13 for a total combined sales of $638. When I do the shakes, I had 100 shakes at $7.50. And then I had 100 shakes at $3.75, which means my total sales for that was $11.25. So $638 versus $11.25. Once again, almost double. So you're thinking, wow, $1,000 in sales, that's awesome. That's going to be great. Versus only $638. Well, let's find out. Is it? Which means for a total, you really did 200 units, right? Because you bought one, you got one. It was just the price that was off. So let's go with that. So we sold 200 cones. Well, the cost of goods for each of those cones never changed. So each cone was still $1 cost of goods. So that means my cost of goods for those 200 cones was $200. My cost of goods for the shake, it was still the same ingredients, right? That's not going to change either. So it was $2.80 for cost of goods, but now we're timesing that by the 200 that we sold. So my cost of goods for the shakes are $560. So $560 went out in cost of goods for the shakes, $200 out for the cones. Now, when it comes to the expenses we can do it one of two ways. One way is you can say, well, I'm still going to set aside the same 60% that I did off of these new numbers, in which case the cones are going to be $382.80, and the 60% of the total sales for the shakes is $675. Excuse me. So if we run through these numbers, right? 638 in total sales in the cone, minus the cost of goods of 200, minus the expenses we set aside of $382.80, means we made $55.20 at the end of the day after that special. $55.20. For the shakes, we made $1,125 in sales, minus the $560 we had for cost of goods, minus the $675 we set aside for the expenses, means we lost $110. That's right. You ran this special and you actually lost more money because we have to set more aside for those expenses. But what if the expenses didn't change, right? What if we just said, hey, I got extra sales, but my expenses, I'm going to leave them at what the original number is. If I leave them at the original number, I'm not going to lose any money because you took more money out because of that special. I did, but okay, let's go back to what it would have been had you just sold the initial 100 and then the others just bonus money, if you will, okay, without that extra expense. What would that look like? Well, let's run those numbers. So after our special, we still had $638 sold in ice cream, minus the same 200, but our original cost of goods, our original expenses would have been $276, which means that if we don't account for the extra expenses because of the new sales, our profit from our special would be $162. So it sounds much better than the $55, right? Okay, but what about the shakes? Well, we still had $11.25 in sales, minus the original $560 in cost of goods, but with the old expenses of $450 means we made $115. So we're not losing money, but we still only made $115. So even with that slight change when it comes to the expenses, our cones still come out ahead at $162 to $115, even though there's about 500 more in sales. Now, this is unique to this particular example, and yours might come out different, but the point of the entire exercise and the reason we're here is run the numbers. Use the sales minus cost of goods minus expenses equals profits to plug in the numbers so you can figure out which one's the best. So it really just depends upon your business, but I challenge you to take each of the areas of your business, just loop them together, look at different SKUs, different ways of looking at it. When I go back to this ice cream example, the reason that this one is so near and dear to me is we used to run buy one, get one free ice cream all the time. Well, when I buy one, get one ice cream, I still made money. But when I would do the shakes, I would lose money because the money that I took didn't even cover the costs of what the shake was going to be. It was absolutely stupid, and I would always push back going, no, I'm not going to do a special buy one, get one free or buy one or half off because I wasn't going to ever make more money. If I was trying to get more customers to come in, you know what? The odds are I got way more people that were taking advantage of the cheaper price anyways, other than the one that was more expensive. And my labor costs went up because I already told you, technically, it took longer for me to make those items and we didn't even put that in here. So you have to look at all the different factors and all the different things that play in to what the costs are for that particular product or service that you sell, and just run the numbers. And you'll see, it didn't take long for me to do this even at home, just plugging in the numbers and going. As you can see, when you use the sales minus cost of goods minus expenses equals profits, you can figure things out pretty quickly as to what's going on, because really the only thing that you need is to know how much things are and what percentage should you be using for your expenses, which is just take your total expenses divided by your total sales. It's going to give you the percentage that you want to use. Now, is it going to be perfect? No, but is it going to be pretty darn close? Absolutely. And some months might be different than others. I mean, sometimes it might be, 40% during these months, and it might be as high as 75% in these months. I'll guarantee you, if you have a brick and mortar, right now, for some of you, your expenses run 20, 25%. But if you have a brick and mortar, you're looking at 50 to 75% for the brick and mortar side of it, because the expenses go up so much higher. But you got to run the numbers. You got to run the numbers because you got to understand, is it better for me to chase the sales, or is it better for me to chase the profits? Like I said, I'm all about sales. You want as many sales as you can possibly get. I just want you to have profitable sales. I want you to make money. I want you to make sure that you're pushing the right items. I've watched people run specials or get behind certain areas, and they were making the least amount of money on that. But they were so caught up on the sales side of it, they weren't even looking at the fact that they could make way more money by selling one of their other items and really pushing that particular thing. And by the way, I can sit here and I can say, you know what, Tammy, the other thing that would solve this problem is if you took the shake from $7.50 and made it $7.99, right? 50 cents add on to that, and all of a sudden now it's making more money than the cones. Absolutely. That is definitely something you should do or look at if that's the right thing for you to do. There's so many different things that you can find out when you're looking at this. I just want you to be informed. I want you to know. I want you to be looking at your numbers from all different angles before you make a decision on something. So this way you're chasing profitable sales. I want you chasing sales, but I want you chasing profitable sales. I want you to be making money, okay? I want you to be making the right decision. For some of you, your expenses might go up from an operational standpoint, or they might go up because you're going to be running ads and you're going to be running all these other things. So it really jacks up the expenses higher because of that particular thing that you do. Or it could be that your cost of goods go up because it's more labor intensive for you to push that particular thing, or whatever it is. Sometimes people go, well, we're going to run this big event. Okay, well, the big event is more than just what you sell. It's all the costs associated with running that event as well. So you need to make sure that you include that in there also. All right, so many different factors that go in there. I just wanted to present an example for you today for you to be able to use in your business. If you found this helpful, do me a favor, put a comment down below, hit that like, subscribe button so you never miss any of the other episodes. We're going to continue to talk about money and how you can be more profitable, and I will talk to you on the next one. Bye for now.